Tune into ET now. This is Buy Now, Sell Now with me, Karunya Rao and Varun Hiramatwa. Moving on to the market updates then, you have the Nifty and Sensex back firmly in the green actually. Nifty is trading above 10,330 levels. Sensex is up a good 90 odd points as we speak. Broader markets relatively outperforming the benchmarks. Midcap index is up about 0.8%. Small cap index is up 0.5%. And like Varun had also flagged off, barring the IT index, all the others seem to be firmly in the green. Well, you have some selling pressure coming by in the realty space as well, and some select names from the media pack also witnessing some pressure. But overall, it's looking like a firm market. Let me highlight some individual stocks as well. From the broader markets, you have a GICs flying in trade 7.3% after the results being delivered last evening. Indiabulls Housing continues to be in focus, up 5.5%. Adani Transmission, Hinzing, Piramal Enterprises, Bandhan Bank. These are some names from the mid and small cap indices that are up in trade. And from the benchmark, you have a GAIL, which is the top gainer, up 5%. You also have MotorCop in the fast lane. It's gained close to 3% as we speak. ITC continues to rise. It's right now up 2%. You also have the likes of a Colgate up 2%. HDFC Life is doing well. Biocon, Siemens, Dabur, Concord from the mid and small cap indices. Some more names to watch out for. All right, like I said, the realty index has been in focus for quite some time, especially since the lockdown. It's one of the biggest casualties as far as the sector is concerned. Let's touch base with the management of Prestige Estates. The stock right now is also trading a bit weak. Let's understand what the collection trends have been like, the lockdown impact, rental trends, etc. We have Mr. Irfan Razak, the chairman and MD, joining us right now. Mr. Razak, thank you so much for touching base. Despite the lockdown, you've managed to reach and, some cases go beyond the guidance at the start of the year, which you had given for FY20. Are you giving any guidance for FY21 at this point in time, or will you be playing it by the year and see how things pan out?
FY21, actually, we have stopped short of giving any guidance because these are very uncertain times. So it's very difficult to right now predict what's going to happen the next week or maybe even in the next day. So best is we are trying to play it by ear, but at the same time what we are doing is we're not stopping from carrying out our activity, because I believe again the demand is picked up quite well, and there is sort of commitments that are coming from customers, which is a fantastic sign. It is helping us actually to even do some new launches. And today itself, we have a new launch called the Prestige Primrose Hills in Kanakpura Road, and that will probably help us to take things forward further and get our targets. But then we may have kept internal targets, but right now we do not want to commit ourselves in the public sphere, more so because we are in some uncertain times.
All right, thanks for that. Good morning. So how are tenants coping with pandemic in terms of their leasing, releasing and renegotiations of their terms with the tenants, especially for your longer tenure tenants?
See, there are various asset classes. Let me start with office. Now, office, fortunately, it was a near full, like 100%, near 100% occupation. And that helped things, because then what happens is we really don't have to chase and look for new occupiers at the moment, because the focus will be different even from the occupiers and the business perspective, because even those spaces that have been leased out are now like nobody is working from there at the moment. They're just keeping their servers and running their minimal electricity in terms of AC and keeping the premises in a sanitized condition. Some have started working, but most have not, because more so of the fear, and they also want to keep the employees safe. But there's no, from the office side, there are no sort of notices for quitting spaces. Even if there is, it's very, very minimal. and more so, moreover, the rentals are being paid by the tenants because they are occupying our premise, and all the infrastructure is in place, and we are helping them with their business continuity. However, going forward, I believe the new business will only come once things settle down, maybe a quarter later, and we'll have to look at things.
All right, and could you talk to us a little bit about the launch pipeline going forward, especially with labor worries emerging for rental businesses, and what exit rental trends are you targeting?
See, now exit rentals for currently the year that has gone by, I think it's around 950 to 1,000 crores is the exit rentals as of now. That is March 31st. And I don't want to make any prediction for March 2021. We'll take it as we go along. But right now, this is the exit rental that we have. And of course, once the production, more and more space comes in, we are going to boost it up. 2 malls are under production, which will take another year and a half to complete. And there are a lot of other office spaces which are under construction. Even that will happen. There will be a delay of from the original to now by about 3 to 6 months. As far as residential is concerned, we are on track to deliver to our customers almost on time because we had a buffer which we had kept for any delays that could happen. And our customers can be rest assured that our contractors have told us that they'll somehow or the other get the required labor and make sure that they deliver on time. And for that, on that aspect, we are pretty happy that and confident that we will satisfy our customers and deliver to them on whatever timelines that have been committed, give or take some 2 or 3 months.
Minister Piyush Goyal has called for a sharp reduction in prices. Want to understand if that is a viable option or that is something that's likely to happen. Do you think developers will be forced to cut rates anyway?
See, now I've heard that statement of Goyal ji many times. I don't know in what context and it was said. But what he really meant was that, listen, if you have real estate is there, it's a product that is, it's a ready inventory that you have. You may as well sell and liquidate and pay off the banks, and we are not here to support you to subsidize you for it. In fact, the real estate industry does not look at the government for any subsidy whatsoever. Having said that, what we need is, since we are an industry that supports almost 250 ancillary industries, and we also are the largest provider in terms of employment for the unorganized sector, and also we churn the GDP. What the real estate sector is looking for from the government is a support. Now, what is the type of support we are looking for? Because you see, this is a time where all of us have to go hand in hand if the government is serious in churning the GDP, because the real estate, apart from building houses, because in Indian context, housing is definitely a need, depends on which sector, which segment of the population you're catering to. Today, small, big, medium developers are all catering to all segments of the population, and everybody needs a house, whether it's somebody who's starting to buy a new home first time, or it's someone who's upgrading from a 2-bedroom to a 3-bedroom or a 3-bedroom to a 4 or 4 to a villa. Everybody needs their living spaces. Now, all this is actually helps churn employment, churn the economy, churn the GDP.
All right, well, we'll leave it there for this morning. Thanks so much for taking out the time to chat with us. So that was the management at Prestige talking about the latest at their company. But let's switch gears. Kunal is now with us. Good morning, Kunal. We're seeing a lot of volatility, and today it seems to be kind of flattening out around this 10,300 mark, although there has been a recovery from the morning. So what does that say to you, despite the fact that your US futures are still, I think, dipping in the red?
Yes, US futures still in the red. Last I checked, I think the Dow futures was down, I think 140, 150 points. But I think what's been more transpiring for our markets is what's happening across the globe. I think the concern which happened yesterday for Dow futures and the Dow Jones yesterday closing in the red by more than 700 points, I think has had effect in our markets as well. And I believe that that's something to take note of. So what generally was the indication since last 1 month is that the markets were going through a full throttle upside. So I'm talking of the Nifty, the Bank Nifty, the individual stocks, because you had the parent US markets or the major market across the globe, which was showing a lot of buoyancy. Now, if that markets goes through a bit of correction or a reversal, I think short-term traders from our markets as well, they can't adopt the same strategy of buying momentum what they did for the entire last month, or I think good part of the month of June as well. So there has to be some shift in the strategy, and I think that shift in strategy is what would probably take place in the markets over the next couple of days. I would sense that over the next couple of weeks, if the US markets continue to totter the way they've been doing last 2-3 trading sessions specifically, then I believe a chance of a correction, more of a, I would say, a retracement or a reversal for our markets is very much likely for the Nifty, for the Bank Nifty, and I think more specifically for all those penny stocks and those small digit kind of stocks which have rallied significantly higher in the last 2-3 months.
Well, after recommending 2 sell calls yesterday, I think you're again looking at being more optimistic and recommending buys. So you have 2 buy calls, both heavyweights. Tell us more about that.
So yes, Karuna, and the view is that for today, maybe because of the Bank Nifty of the index expiry, I would sense that you could have some bit of recovery, which could probably pan out even in the second half. So it's just that from a very, very short term view, maybe because of rollovers, maybe because of some sort of F1 expiry action, you could see a couple of stocks moving up higher. And I've picked up stocks which are of so first one specifically, that's ITC, which is specifically from a low beta category. The stock looking quite stable on the short term charts. In fact, if I'm not wrong, the stock has confirmed the breakout on swing resistances as well across time frame of more than 3.5-4 months. So I think it's a very strong chart in the making. And when you're looking at the markets getting into slight volatility, I think names like ITC could probably act as more defensives as well. So I picked up ITC as a buy, targets of 205 plus. Stoppers could be kept at 188. Second is a slightly high beta stock, and again a very short term oriented trade, maybe with a time frame of 1 or 2 days only. Tata Steel, the stock showing signs of supports at this 310, 315 zone, which I now believe is a very important support zone for Tata Steel. So just with the pure risk reward trade, more of an attractive risk reward, I think Tata Steel could be an attractive buy. Targets to be kept at 340 and stop loss 310.
Well, thanks for that. Ashish Maheshwari also joins us to talk about fundamentals and long-term wealth creation ideas. Ashish, morning. What are your bets for the medium to long term?
Yeah. Couple of bets which I've identified for medium to long term. Again, the criteria is that with revival in economy, this particular company should do well. At the same time, the valuation should be attractive. So my first bet is Jammu and Kashmir Bank, J&K Bank. Earlier, we have seen a lot of write-downs on this bank when this bank was controlled by local government, but now it is controlled by Government of India directly. And there are a lot of restructuring which has happened in the bank, and from a lot of private sector banks also at top management now people are joining. So I'm expecting a sea change in the working of this bank with this market cap of 1400 crore and with a book value of 70 rupees. Stock current market price is just 19 rupee 80 paisa, which is a steal in my view. I'm expecting this year they will do 400 to 450 crore kind of profit, and next year is going to be a bumper year for Jammu and Kashmir Bank. So this is a bank which should be in your portfolio at this price. Stock has just moved 30% from 52-week low, but a long way to go. But another pick is Hindustan Zinc Limited. In my view, first of all, Vedanta delisting is to be funded, and it can be funded by primarily the dividends of Hindustan Zinc Limited, because they are sitting on almost 21,000 rupees cash with them. Along with that, there's a revival now in demand in steel and other allied products. So zinc prices are also moving up, and their mining and metal smelting capacities are also back to almost pre-COVID time. So in my view, at 190 rupees, 40 to 50 rupees dividend, which you may expect in coming few months, this is also going to be a good bet, and there's no downside in this stock till Vedanta demerger takes place. So we can expect a price target of 240 to 250 also in Hindustan Zinc.
All right. Okay, let's start off with our viewer queries as well. We've got an email from Mr. Ram. He wants to invest in SBI at the current market price. Wants to know what should be the strategy. Should he dip right into it? Should he wait for some correction or some small blips coming by? What is a good entry point into SBI? Kunal, coming to you first. The stock has seen a decent run up in the last 1 month from 150 levels to now trading at 185, 186. Good time to buy, or should he wait for some dips?
I think you should wait for some dips. I think if my sense on the charts is that there's some sort of a significant correction which could probably come across the globe, then of course the banking and the financial services name, especially the likes of PSU banks, they could be at this brunt of some selling pressure. So I think in that regards, there could be some concern which could arise into the stock price. As an ideal entry point, I think the previous low which SBI hit, I think it was, if I'm not wrong, it was at the 150 mark. I think that's a good entry point for the stock price. So maybe plus or minus 5, 6, 7 odd rupees from those levels should be a good entry point. But again, we have to try and watch the overall market conditions as well. That if there is some improvement, some positivity in terms of news flow which happens across the globe, then maybe those levels could be shifted up higher. So I think in that regards, I think buying on dips is a better strategy in SBI rather than buying it on momentum. Remember, banking and financial services names specifically, purely on the trading perspective, have not been one of the leader sectors or the leading stocks. They've been more laggards in terms of price performance. So there's just a catch-up play which is happening to these names, and catch-up stocks generally tend to reverse first when the market's going to a reversal mode.
All right, thanks for that, Kunal. Ashish, what about you? Would you like to step in? What is your take on these same companies?
Yeah. In my view, SBI can be bought at current market price because, first of all, SBI is always a barometer of how your economy is doing. And now, as economy is showing some green shoots of some demand revival and some key parameters are also reviving. So SBI will gradually will start moving also. So if we see the fundamentally, whatever the write-downs were there related to NPA, almost in last 4 years, they took 1.8 lakhs crore write-down already. So I don't see there's a big challenge now as far as NPA related issues are there. And we have seen their gross NPA also dipping continuously from 10%. It has come down to almost 6%. And another change which has happened recently is they are also focusing on more retail kind of portfolios. So their housing loan is doing really good because their rate of interest is one of the lowest in industry. And they're proactively building a retail book. Along with that, there again, PSU side also, their exposure is almost now 40% of their book, which is again on safer side. So my suggestion will be to start accumulating gradually with this bank, because if I see FY22 valuation, still it is available at 0.8 times to average book value of FY22. So SBI, in my view, if we can keep a stop loss of 170, you can start accumulating.
Right, thanks for that, Ashish. So I'd say quite a positive view on that one. Let's move forward to our next query. We have R. Jen writing to us, and he's bought 100 shares of Ashok Leyland at 35 rupees per share. He wants to know things from a long-term perspective. So Ashish, let's stay with you. Ashok Leyland, long-term view, what's your call?
Yeah, automobile, in my view, will face some more challenges maybe in next 1 year. But only thing is the valuation is key. Where Ashok Leyland is a stock which you have accumulated at very good price at 35 and already 50, 354 already. But in my view, it has still more potential to go up because fundamentally it is one of the best managed medium and heavy commercial vehicle company, if you ask me. And 90% of their focus is into Indian side. And now government is whatever their thrust is giving to rural economy and infrastructure and real estate, etc. Ashok Leyland is tend to gain out of all those steps. So you have to knock off this particular year, but next year onwards, they are going to see a fantastic revival in growth. So in my view, still you can continue to hold, and I'm expecting a price target of around 65 in next 6 months in this stock.
Right. Kunal, he's bought into Ashok Leyland at its lifetime low levels, 35 bucks. I mean, I don't think it can go any worse than that, and he's already made a good amount of money. Till what point should he continue to stay put? Are you observing any levels or anything that one should watch out for this particular stock?
See, I think what the viewer has to do now is just to try and expect that maybe the stock remains more sideways and doesn't exhibit the kind of volatility it had shown in the entire 2018 and 2019 as well. So I think in that regard, there should be some sort of maybe an expectation which you can build in. I think that level of 35 which you bought is a very important support zone. So if you see the charts as well, I think the March low for Ashok Leyland was around 33.70, and I think subsequent lows retesting was around 37 mark. So this 33 to 37 zone, more or less a 35 as a pivot point, is now a good support for Ashok Leyland. So keep that as a stop loss. Keep your cost price approximately as a stop loss, and hold on to it. And let's see how the events pan out over the next few months and next few quarters. If the auto revival is here to stay and there's some big revival which happens into these large cap names, I'm pretty sure that it should happen. It should have a trickling effect into the likes of Ashok Leyland as well. So hold is what I would recommend, and keep a stop loss at your cost price, which is around 35.
All right. Thanks, both of you, Kunal as well as Ashish, for joining in and helping our viewers out as always. Before we slip into a break, let's take a quick look at the buy now, sell now stock cloud to understand which are the stocks buzzing in trade, the ones you need to keep your eye out in trade. Starting with the GAIL, it's an earnings candidate. One of the top gainers on the benchmark index as well. So GAIL is one which is flying away in trade, followed by a hero MotorCop. In fact, this stock has been climbing up for quite a few days now and continues to trade above that 2500 mark per share. ITC once again on an up move, right now higher by more than 2% in trade. It continues to be very much in focus, followed by an ICICI Bank. On back of that news of stake sale to raise $3 billion, the bank continues to hog the limelight. From the IT pack, you have an Infosys that's sulking in trade. You also have an HDFC Bank in focus. And Infratel, some news came by about extending the date for their IndusInd deal to August 31st. The stock continues to be in focus on back of that. From the FMCG pack, other than ITC, another name that's buzzing in trade is Dabur. Talking about some earnings candidate, you also have a GIC delivering their numbers last evening. The stock continues to rally in trade. Lastly, we also have a Piramal Enterprises, another stock to watch out for.
Welcome back to Buy Now, Sell Now. We're now joined by the management of Canara Bank, LV Prabhakar, MD and CEO, who just reported his results very recently. Good morning, sir. Welcome to the show. Let's begin with the first question, talking about the Q4 numbers specifically. What were the key highlights in your view?
On liability side, we have concentrated on savings bank deposits, especially CASA. And the result is the growth is about 12% compared to YOY. Again, under CASA, we have concentrated on increasing the percentage of CASA. In the sense, from 30% in the last year, now it is about 32.5%. So we have seen that how to reduce the cost of deposits and to increase the CASA deposit. That is one thing. Second one is we want to increase the retail deposits. So again, the retail deposits, we have shown a growth of about 11%. This is regarding the liability side. Asset side, we have concentrated on retail advances. For example, we have grown at 12% under retail. And under housing, we have grown at 18%. So the focus area was retail. And apart from that, this time we have concentrated a bit on corporate also, so that even though the figures are flat, it has not gone down, and we have taken care about all our customers.
Given that a lot of banks are looking to now raise money, will you also be considering something similar?
As far as our bank, I can say that liquidity position is very comfortable. And if you see, we have reduced the rate of interest in many of the credit schemes. Even in gold loans, we have reduced the rate of interest to 7.65% because whatever liquidity we have available with us, we want to deploy that where the risk weight is less and also where the production activity will be there. Under MSME, we have consolidated a lot, and under the present emergency credit line, which is guaranteed by the Government of India, we are one of the best performers. And we are contacting each and every MSME customer, and we are requesting and advising them to utilize this fund, which is available at 7.5%. So I think as far as the liquidity is concerned for our bank, I think we are in a strong position.
Could you also give us a sense of how the moratorium numbers were? How many or what percentage of your customers are availing the moratorium, and which segments are seeing more of moratorium being availed?
So bank as a whole, 19% of our customers have availed the moratorium facility. In terms of outstanding, 17% of our customers have availed. And if you come to specifically to MSME sector, about 38% of the outstanding is under moratorium. And going to retail, only 5% of the outstanding has availed. So we see that in MSME, people are using this facility.
So do you envisage any portion of this moratorium book potentially turning NPA?
We have already declared that about 1,880 crores is under hold, for which we have made about 5% provisioning, which comes to about 94 crores. So we are in touch with these customers where the hold is there, and we are in regular touch with them, and we are telling them to avail the other facilities given by Canara Bank, especially Canara Bank COVID support, where we give 10% additional outstanding facility from the bank side, and also the 20% which is being given by the government as 100% government guarantee through the banks. Those things we are encouraging them. So I don't see much impact as far as this outstanding which is under hold. However, yes, we have to be in regular touch with them to see that in September, most of the accounts are given proper hand-holding and support so that they will pay the installments.
Okay, all right. So let's move on to some other highlights as well of the quarter. Can you tell us what the credit demand was for Q1 as well, how it shaped up, and which sectors are looking more active?
As far as credit demand is concerned, I think I have to bifurcate into retail and then corporate. So you have seen our figures. So retail, we have grown at 12%. So we say that demand is there. And corporate, it is almost flat. It is not negative. It means people have repaid and utilized the funds. Going forward, I think we are expecting a growth of about 7 to 8% as far as the credit is concerned. And in the last 3 months, we have already disbursed about 91,000 crores to various sectors of the economy.
You know, we've seen the government stakeholders talking about green shoots in the economy. Several companies have also highlighted that. Where are you seeing the quickest recovery, and where do you see enhanced lending opportunity going forward?
First thing is MSME already the MSME entrepreneurs, they have started their work, and it is the right time for the bankers to assist them in terms of liberalized lending procedure. And second one is we are seeing a bit traction in retail, especially in vehicle segment, and housing loan also inquiries are coming. And going to corporate NBFCs, they are in need of money and we are helping them. Apart from that, nowadays we are getting inquiries regarding some corporates whom they want to avail this emergency credit line, which we have declared as a special scheme under COVID. So I think going forward, MSME will be the sector where there will be attraction, then followed by retail, and then followed by, of course, corporate and NBFCs.
All right. And, what is the approach to lending further to NBFC and HFCs, and how are you managing that and the increased demand from them while also managing the NPA risk over here?
Yes. Our figures gives the impression that only 3% of the outstanding under NBFCs, they have availed the moratorium. For this, there is a reason. The other people, they have availed the other credit facilities which was given by our bank, and also they have used the facility available under TLTRO1 and TLTRO2. So this has also helped them to have liquidity and to pay back the installments.
Interest rates, and do you think they're going to further head south, and then what does that do to your lending policies?
Regarding transmission of the interest rates, I think we are in sync with the market in the sense all the advances which are linked with RLLR, it is being transmitted immediately. That is, whatever reduction is there, it is passed on 100%. In terms of MCLR, yes, we are unable to pass on as it is, but in the last month, we have passed on about 20% basis points rate cut under MCLR.
Could you also give us some kind of commentary or outlook for recovery and resolutions? How much do you hope to recover this year? And if there are any specific accounts that you're hopeful for where you can see recovery or some kind of resolution coming back?
We are expecting that we should be in a position to recover about 9 to 10,000 crores in FY21. Out of this 10,000 crores, we expect about 3,700 crores from NCLT accounts. One big account where we are expecting the recovery is regarding Bhushan Power and Steel.
All right, sir. Thanks for that. Finally from us this morning, so what's your guidance on credit cost, asset quality and slippages, if you could give us something for the rest of this year?
For this year, our credit cost was 2.46%, and last year it was double. But we are hopeful that we'll be maintaining the credit cost around 2.5. And regarding the net NPA, as on date, we are at 4.21. I think we'll be maintaining this ratio in the coming days. And gross NPA is at 8.22. I think we'll be in a position to maintain the gross NPA around 8%.
All right, let's leave it there for this morning. Thank you so much, Mr. Prabhakar, for taking the time to speak with us. That was the management of Canara Bank on the back of its Q4 results. But let's surge forward, keeping it with financials. There's been a lot of fundraising in the offing. ICICI Bank with a possible $3 billion raise. A large financier which also has a lot of mortgage loans coming out and doing a large raise like this definitely spooked investors to a certain extent yesterday. Today some of that ground seems to be remade. We are also seeing these announcements come in from all other financials: M&M, HDFC Limited, SBI, Yes Bank. So there's a long list of these, and what's interesting over here is if you look at the capital adequacy ratio, there's no compulsion to raise money. All of them are well above the regulatory limits. So that means that even if something happens, you already have existing buffer. So the smallest raise, I think, is from M&M for around 500 mil or 4,500 crores. Everyone else is looking at least $1 billion. So that, gives you an indication of how large the pain potentially might be. So if you add it all up, there's been 8 such announcements in the last 30 days alone. So, possibly building up this buffer, and then even banks like Bank of Baroda and Union Bank, who we spoke to yesterday, said the same thing, that capital adequacy ratios are fine, but we're still considering a top-up given that we really don't know what lies ahead. So I think that's the theme that's currently going on in financials, and this is something that Uday Kotak himself flagged off very well with a nice analogy at the CII conference. Let's listen in.
About each business as a boat in high seas. Okay, we are navigating in high seas. There's a huge thunderstorm and a cyclone in the middle of the seas. And each of the businesses are in their boats, some of them bigger, some of them smaller. First job is to navigate your boat well. Second job is, when you start seeing the shore on the other side, to see that there is a big opportunity on the other side of the shore. Not all boats will reach the other side. But the boats who will navigate well and survive will have an opportunity on the other side of the shore. And if you take this example, having a stronger capital base and navigating your boat well through the storm for opportunity on the other side is the key to the future. And therefore, my strong advice to my fellow colleagues in corporate India, including in banks and NBFCs, is the markets are giving you an opportunity. Go out and raise your capital and do not nickel and dime on the price.
Okay, moving on then, let's talk about some earnings to watch in trade. Ashok, Leyland is the most prominent one that you should be watching out for. We're looking at a weak set of numbers given how not only has it been a bad quarter for Motown, but CV space especially is worst affected given that they were already in the midst of a down cycle. Ashok Leyland is exactly going to reflect that in its numbers. We're expecting a sales degrowth of 60%. EBITDA is likely to fall 88%. Margin compression, a severe one, is something that we are expecting, 3.4% versus 11%. So that's the kind of margin compression we're watching out for on back of heavy discounting, on back of negative operating leverage. Of course, we all saw that volumes have also dropped significantly, close to 57-58% in the quarter gone by because of BS6 related transition. What are the factors I will be watching out for? Well, firstly, how the industry is faring right now. Are they taking enough steps to bounce back at Ashok Leyland? What is the capacity utilization for the CV space and for the company? Demand, production, the supply side, if they're facing any concerns, liquidity, how is the company positioned to handle further pressure over the next couple of months and quarters as well, and also what is their product rollout strategy given the new emission norms as well. So these are some things one will be watching out for as far as Ashok Leyland's numbers are concerned. The stock is trading largely flat ahead of its numbers.
All right, thanks for that on Ashok Leyland, Karunya. Sure, the street will be eyeing out for this one definitely. But let's switch gears a little bit and stay tuned, because all day today we'll be getting you a top voice on the world economy. Mohammed Al-El-Arian, the Chief Economic Advisor at Allianz, spoke to us earlier this morning on the road to recovery from this pandemic. Hear out an excerpt where he talks about why markets are not reflecting the current economic realities.
One is the market has embraced the V-shaped recovery, and it has talked itself into looking through the inevitable short-term difficulties facing both the economies and companies. But it has also stumbled into another very supportive narrative, which is what I call the win-win. It doesn't matter if you're wrong on the V, because central banks in the advanced economies will bail you out. And that is because central banks and the Federal Reserve in particular has done things in scale and scope that were unthinkable, including buying high-yield bonds. So the market has this win-win mentality, and that has driven us much higher than anybody anticipated and decoupled us completely from the underlying fundamentals.
back. You're still watching Buy Now, Sell Now. How has the June F&O series shaped up and what's in store for July? Well, Jayesh is here to do some crystal ball gazing and tell us how the trends panned out and how they are likely to shape up. Jayesh.
It's been a good series as far as the bulls are concerned, because if you have a look at the rollover picture, that too has been slightly above the 3-month average. The Nifty rollover stands at 61% as compared to 56%, and you have the Nifty bank rollover which stands at 55% as compared to 52%. But like I was telling you, it has been a good series for the bulls because the Nifty is on track for its second best series of the year, while the Nifty bank is actually on track for the best series of 2020. Other sector indices that have led from the front, the PSU Bank Index, 33% gain for that one, and the real estate space has gained about 25%, with the broader market indices also managing to give you more than double-digit return for this series itself. The Pharma, IT and FMCG pack have, however, underperformed, with those indices gaining less than 10% each. Let's also have a look at the F&O gainers and losers then. Starting off with the top 5 gainers, you have Indiabulls Housing Finance, Vodafone Idea and RBL Bank that make it into this list along with Bandhan Bank, and you have one index name which is Bajaj Finance that has given you more than 50% return for this series itself. As far as the losers are concerned, not much to talk about, but you have IGL, NIIT Tech and Exide Industries that have declined 6% each, and you have two index names, Nestle as well as Z Entertainment, that have also declined marginally. But the July series promises to be exciting because there has been a lot of changes that have been done into the F&O space. For instance, the Nifty bank contract size has been revised to 25 from 20 shares. Nifty IT contracts will actually be excluded from the July series. You have 4 stock contract sizes that have been revised downwards, and on the other hand, you have 74 stock contract sizes that have actually been revised upwards.
All right, thanks for that, Jayesh. But let's switch gears. There's something brewing at IIFL Finance, and in what could be an exclusive, my colleague Vivek is now with us on the phone because it seems the promoter has hiked his stake beyond a key threshold which might now trigger an open offer. ET now has written to the management but is still waiting to hear. Vivek is now with us. Vivek, take it away. What does this mean for IIFL Group stocks? They all seem to be fairly active since we figured this out.
Absolutely right. So what has actually happened is that, and the company in focus in the entire IIFL group is IIFL Finance. So now in an upload to the regulatory authorities, the filing actually shows that promoter Nirmal Jain yesterday purchased an additional 0.12% stake in the company. So now and he has bought it on June 24th, that is yesterday. So now with this particular stake purchase done by Nirmal Jain, the promoter group holding in IIFL Finance has crossed the 25% threshold. Now, what actually it indicates is that, and SEBI rules clearly mandate an open offer will and has to be triggered in case the stake crosses 20%.
It's definitely a big one if something like that was to happen. Thanks for bringing that to our attention and to our viewers as well. On that note, I think we've run out of time, completely out of time here on Buy Now, Sell Now with me and Karunya. Thank you so much for tuning in. Markets at noon coming up next.